Hello and welcome back to another edition of Investing for Generations, your channel for high quality stock research for long-term value investor. And as always, I'm on the hunt and on the search for high quality businesses for my real money portfolio. So today I want to look into another company which maybe can be part of my real money portfolio in the future. And as you know, I look into normally real, boring, very stable and profitable businesses for my portfolio. And here you just see the pie of this portfolio and you see there is not a lot of tech, not a lot of hype, very, very grounded, profitable companies overall. If you're new to my channel, I give you every week an insight to this real money portfolio with every move I made and also, of course, the performance. And over the last few months, since the 2nd of December 2019, when I started this portfolio, I have a performance of currently 54%, which is a huge outperformance to the S&P 500 of almost 30% in this same time span. And that's great. And as I said, you get an update every week, normally every weekend on my portfolio. And if you like this idea and if you like the transparency with that, then just subscribe to my channel and follow me on my road to financial freedom. And today I want to take a look at Church and Dwight, a company in the first look who can match my portfolio because it's a profitable, good company. And in this video, I just want to take a deeper look into the company and into the financial numbers, and then also calculate the intrinsic value and just make a decision if it's a good investment right now and if it maybe match my portfolio right now. So let's start. So Church and Dwight develops, manufactures and market household personal care products in the United States and internationally. It operates in three segments: consumer domestic, consumer international, and specialty products division. And so Church and Dwight have a lot of brands of consumer products, and here you just find a picture of all of the brands. And I'm very sure a lot of you, especially when they live in North America, know these products and these brands. And so Church and Dwight right now is trading at $79 with a market capitalization of 19 billion, a PE ratio of 25 and a forward dividend yield of 1.27%. And as we can see here on this long-term chart since 1984, this is just a compounder, and the stock just rose over time to now $79. With that, of course, in the past, something go very well with this company, and it would be a great investment if you invest somewhere here and then just stick with it over time. And the question we have to answer today is it also a good investment right now for the future? And therefore, let's take a look into the financial numbers. And as almost always, I go to Macro Trends, a very, very good website. I highly recommend it to analyze businesses. You find great numbers, all the financial numbers of almost every business. And so also for Church and Dwight. And I start my analysis normally with a view on the revenue. And when we look at the revenue over the last 15 years, then we see it just grow over time. A very, very nice picture, a very nice growth over time to now almost 5 billion of revenue. And when we look at the earnings per share, this is my next view normally, then we also see it's almost the same like the revenue. It just grew over time. And this, of course, is just great. And so now in 2020, they earned $3.12 per share. And also when we look at the margins, we see growing margins, high margins, and right now they have a net margin of 16%, and it's almost every time between 10 and 15% net margin. That's good. That's great numbers over time. Very, very nice. And also when we look at the debt equity ratio, we see this is very healthy, a very healthy balance sheet with a debt equity ratio of 0.6 because they have long-term debts of 1.81 billion and in shareholder equity of over 3 billion. So very, very healthy, very good numbers also on this front. And what's also very, very good and very shareholder friendly, they just decrease the outstanding shares over the last 10 years. And so this is of course very good for the current shareholders. Also very good, very shareholder oriented. So I like that as an investor. So overall we can say Church and Dwight is really a good company, a very solid company with good and stable margins, high earnings, growing revenue, and overall just a nice company you want to own. And this have to be the mindset when we investing. When we invest, we have to think about like we will buy the whole business. That's the mindset you have to have. But of course, to have a good business, a good company as an underlying is not all when you want to invest. The question is also, is the price right? Because no company, no business is worth to pay an infinite price. So of course, overall we can say, of course we have with Church and Dwight a high quality business, but the next step, let's take a look at the price. And just to know if a quality business is it worth to buy at the price, we have to calculate the intrinsic value. And to calculate the intrinsic value, we need especially two things. We need the current earnings, and the current earnings of the trailing 12 months of 2020 was $3.12. And we need an estimate growth. And here Sachs, but also in Yahoo Finance, when you look for the estimates for Church and Dwight, you find for the next 5 years a growth rate of an estimated growth rate of around 8%. And with these numbers, you can calculate an intrinsic value. And of course, if you calculate the intrinsic value, this is not precisely right. It's an estimate. And so of course you can be right, you can be wrong, but at least you have an idea of what's the value of a business. The idea of the intrinsic value is just that the value of a business is just their future earnings discounted by your expected return. To calculate the intrinsic value, I use Excel sheet of Sven Carlin. I highly recommend Sven Carlin. For me, he is the best YouTuber in the finance sector when it comes to long-term value investing. And so I will put the link here down in the description to his channel, but also to the free download of this Excel sheet. So this is really, really useful. And I highly recommend that. And so to calculate the intrinsic value, we just look at three scenarios: the normal case scenario, the best case scenario, and the worst case scenario. And to calculate, we need the earnings per share, as I said before, $3.12 for Church and Dwight for the last 12 months for 2020. And we need the growth rate, and in this case 8% for the next 5 years. And then from the years 5 to 10, I just calculate that it slowed down a little bit to 6%. And then we need the discount rate because, as I said, we have to discount this future earnings to come to a current valuation. And when we do that, and my discount rate normally is 12%, this is nothing else but then your expected return, and my expected return of investments in stocks is 12%. So this is very individual, but for me it's 12%. And then we have also calculated the terminal multiply, and therefore I look at the history of the PE ratio. 20 is like an average for Church and Dwight over time. And when we put in all of these numbers, then we come for a normal case scenario to an intrinsic value of $62. If we do the same thing with the best case scenario, a little bit more optimistic, then of course the growth rate's a little bit higher, and also the terminal multiply is higher. This is historical. The upside of the P/E ratio of 30, and then we come to a best case scenario, and in the best case scenario the intrinsic value of Church and Dwight is $93. And then also when we have a best case scenario, we need the worst case scenario, and there I just put lower growth rates and also a lower terminal multiplier of 10, and then we just come to $33. And when we think that the normal case scenario should be highest probability of, let's say, 60%, and the best and worst case scenario each 20, then we come to intrinsic value of $62. And of course, with an intrinsic value of $62 and the current stock price of $79, then you see that Church and Dwight, as so many other stocks on the stock market, is overvalued right now, at least when you calculate with a discount rate of 12%, which is maybe quite high, especially in times where there's almost no interest rate, and so maybe you are happy with a lower discount rate at these times. If you figure this out with a lower discount rate, then of course can be still a good investment, because as I said, when you look at the discount rate of 12, you come to intrinsic value of 62. But if you are maybe happy with the discount rate of 8%, then the intrinsic value is almost $84, and then right now Church and Dwight would be undervalued. And so the calculation of the intrinsic value, of course, is highly up to your expectations of your discount rate, of your expected return. And so it can be also a good investment, a good long-term investment at these current prices of almost $80. For me, it's not, because I like to buy my shares with a discount rate of 12%, and then not just on the intrinsic value. I like to buy them under the intrinsic value with a high margin of safety. And so Church and Dwight is a great company, a high quality company, but for me too expensive right now. So in my conclusion, I have to say Church and Dwight is a very good and very high quality company, just too expensive for me right now, and so I will put it on my watch list and wait maybe in the next correction or crash to buy. So that's it for today. If you liked the video, please subscribe to the channel and ring the notification bell so you will never miss another video, and then we will see the next time with another analysis of another stock. And as I said at the beginning of the video, every weekend with an update on my real money portfolio. So see you then. Take care. Bye bye.